In this video, I'm going to teach you two main things. Number one, how I pick my stocks to trade, and number two, how I actually execute the trades. The stock selection process that I'm going to teach you is the reason I have an 86% win rate here in my trade tracking sheet. And then the second thing, the execution process, is the reason, obviously, for the 90% in returns since June of 2022. And also I'm going to show you something equally as important, which is why the trading execution process only takes about 15 minutes per day on average. When I created this system, I didn't want to spend hours per day trading. I wanted to do something that was simple and kind of easy to keep my head clear. I live in Hawaii and I just kind of wanted to go to the beach and hang out with people. Like, I didn't want to work that much. I know that sounds bad. That's kind of like the truth. The ultimate vision is to have this system fully automated. So just again, the returns for this strategy are about 91% since September. This only includes the conservative strategy. That's the main strategy that I teach in the Wall Street Vision program. The reason I do that is because it has the highest win rate, the longest track record, and the best return. And if you just kind of want to take a look at the month by month returns, this is what it looks like. Feel free to pause and look at that. We do have some outliers, right? The median return is about 5% monthly. We have very little drawdown, so this is like what the chart actually looks like. I wanted to make it as linear as possible. And then if you were to use different amounts of money, 10K, 30K, 100K for trading, this is potentially how much money you could make just if you were able to replicate the exact returns that I've been getting. So make sure to watch till the end of this video. It's not going to be too long, but even if you never join my program, you're going to have a decent idea of how I obtain these results for completely free. So I don't see why you wouldn't watch this. So you probably know from my TikToks that the whole strategy is based on tracking when company insiders buy their own stock. So I just went on openinsider.com. I clicked the latest insider purchases, and it's October 13th right now, and you can see that there were a number of insider purchases today. Sometimes there could be just 10 insider purchases or so, but other days the quantity of insider buying could be much higher, and you could have 100 insider purchases in one day. And so the reason I look at this website and track the insider purchases is because when an insider buys and they fill out a Form 4 filing, which discloses their purchase, and then they submit that to the Securities Exchange Commission, and then it shows up on this website, there's tons of traders out there that care about that, scour this website, and as a result, the stocks that have the insider purchases, PRKA, whatever, RAIN, INTZ, those stocks get a lot of attention, a lot of excitement starts brewing for them, and that can translate to buying pressure, which then pushes the price up. So my strategy is to go through this website and try to pick which insider purchases are going to cause the most amount of excitement for a stock, and therefore the most reliable short-term price increase. And so that kind of creates the question, like, okay, how do we actually go through this website, and what are the parameters that I use to try to predict which insider purchases are going to generate the most excitement? So the process that I use is called double filtration. And I call it double because the first half of it is an automatic process, and then the second half of it is a manual review process. So I like to use the automation to filter out the simple stuff. So for example, if it's a 0% change of ownership for the insider, meaning the purchase is tiny for them relative to how much they already own, then we filter that one out automatically. Or if it's like a $5,000 purchase, it doesn't even show up on the main section of the website. You'd have to go to the main page. And so I filter that one out because I figure most people won't care about it. They're not going to get excited. The other thing is I filter out amended purchases, for example, or amended filings, which are in this column. So if it says A, which I'm not seeing here, it's kind of rare. It's an amended filing, it's an old purchase, people aren't going to get as excited by it. These are all simple things that are automated away, filtered out automatically. And then there's some other things. And then after the bot sends us alerts with all the stocks to review after the automated filtering, then I go through my manual review process. So one thing that I look at, which is very simple but very important, is the number of insiders buying on the same day. Is it just one insider? Is it just the CEO? Or is it the CEO, the CFO, the vice president, whatever, right? You have all these people, all these titles here. And obviously, if there's multiple insiders buying, that's going to stand out more than if just one insider is buying. And therefore, right, it will generate a more reliable price increase. Look at this one. this is a lot more significant than if just one insider was buying it. There's literally 5 rows, like it's going to stand out more. So that's number one. The second thing I look at is what's called trading volume, which is the amount of money that's flowing through the stock in a given day. And trading volume isn't available on this website. I get it from Thinkorswim, my trading platform. You can either manually look it up, or now I have a bot that basically scrapes that data for me, runs the calculations, and then gives it to me automatically. Saves me a bunch of time. I only trade stocks that have anywhere from $10 million to $300 million in daily trading volume. The reason for that minimum is because if there's less than $10 million flowing through the stock in a day, there's not much activity going on, there's not much liquidity, which is the ability to buy and sell easily. So I'm using a pretty big position size, like 6 figures, and so I want to be able to get in and out very easily. And if I'm trading those lower volume stocks, I still can get in and out, it's just a little sketchy, so I skip those. The other thing is I only trade stocks that have less than $300 million in volume. The reason for that is because stocks with more than 300 million in volume tend to correlate to the overall market a lot more. If you look at a website like FinViz, they have this feature called a heat map. And basically in the stock market, different industries move together. So the semiconductors today all went down. You can see it's pretty violent. While energy all went up, right? Autos all went down. Healthcare's all went up, right? So stocks with higher volume tend to move with their peer companies, their industries, and then also the overall market just tends to kind of move together as well, like usually. Today it was pretty mixed, but sometimes like everything will be green or everything will be red depending on different news and whatnot. But if you're trading these lower volume stocks, the under 300 million in volume, then these big companies won't move those smaller stocks as much. And so we're kind of like removing a bunch of uncontrollable variables from the equation and isolating only for the insider purchase, which is the thing that actually is controllable and will push the price up if all parameters are met. So that's super key. Again, you can't really find it on Open Insider here or other websites. I have to get the data and then run it through calculations automatically. Another really interesting variable that I look at, and it's pretty rare, but it's the insider name. 99% of the time, the insider is no one important, no one cares like who it is specifically. But sometimes you'll see like Warren Buffett buy into a stock or Elon Musk or someone like that, basically a top 10 net worth individual. And those insider buys are much more significant because the person buying is famous. And so those insider purchases are much more likely to generate excitement and therefore a much more reliable short-term price increase. For example, in April of 2022, Berkshire Hathaway, which is basically Warren Buffett, bought 11% of HP or HPQ stock, computer company, and the stock went up, I forget exactly how much, 15% in pre-market trading. And also if you look at like CNBC on the same day, they were all talking about it. Everyone was just super excited because Warren Buffett was buying a new stock. So that's kind of a quick outline of some of the parameters that I use to pick my stocks. As you can see, it's like pretty basic stuff. And there's basically 5 more key indicators that I look for on Open Insider, on my trading platform, and different sources. And essentially, if all 5 of those things are met, then there's an 85% chance that the stock will go up, that the trade will be profitable. And the reason I'm saying there's an 85% probability of success is because all these conservative trades right here that I took all met the parameters that I'm talking about. So I figure if I got 90% of returns with an 86% win rate with that filtration process, then if all the parameters are met for a stock in the future, then it probably has a similar probability of success. Obviously not guaranteed. Past performance doesn't necessarily indicate future results, just kind of like an assumption I'm making. So now that you have an idea of how I pick my stocks to have an 85% win rate, the next question is, how do we actually execute the trade? When do we buy and when do we sell? And so when I started building this strategy a while ago, I wanted it to work by simply buying at market open and then selling at market close, because that's very simple, repeatable, keeps my head clear, and it's pretty easy to automate that as well, since it's the same thing every day. And so that's what a lot of these returns are from, just buying it open, selling it close. But over time, as the market became more volatile, I had to kind of evolve the strategy. So during more volatile periods like right now, what I do instead is I still buy at market open, but then I'll have these early take profit levels. so that if the stock rises significantly, I take some risk off the table. And that way, by market close, if the stock sells off a little bit, I took that profit off the table early. But then other times when things are more chill, I can just buy it open, sell it closed, and not really worry about it as much because things are less volatile. And also, to make the whole thing as easy as possible, what I do is I just click one button at market open to buy. That same button will then set up all the take profits for me and then the stop loss as well. And that way the trade's fully managed just from clicking the one button, because it will buy for me, and then as the stock rises and hits those take profits, it can sell a third at each one, third of the position. And then if the stop loss is hit, it will just also close out the position. And then all I have to do is kind of check in an hour before market close. And if any of the take profits or stop losses remaining, I'll just cancel them and then close out the position. And so the next question you might have is, how are the take profits and the stop loss actually calculated? The first thing I do is I look at the stock's volatility, or average daily trading range, or ATR. And that just tells me on any given day how much does the stock move, just naturally without any news. Apple stock, for example, is pretty chill. It might only go up or down around 2% on any given day if you just look at the average of how it's moved in the past. But then a stock like GameStop or AMC, one of these meme stocks, those stocks are more likely to move 10, 15% on any given day. So let's go back to how I calculate the take profits and stop loss. Basically what I did is I took the past few years of stocks that had insider purchases and filtered for the ones that met our parameters. And then what I did is I got the stock's open price for that day, the close price, and also the highest price of the day and the lowest price of the day. And that way I can kind of see where did the stock peak out at percentage-wise. Then I got the average trading range for each stock so that I could compare the peak price to that stock's volatility to basically get a peak price relative to the ATR. Because each stock's volatility is different. So a stock peaking out at 10% might seem really good, but if the stock's volatility average trading range is 20%, then it actually moved up less than the average daily move. After I had all of the stocks peak price relative to the average trading range, I just took the average, and what I found is that stocks peak out at 150% of their daily trading range on average. So that gives me a really good place to put my take profits. I can set the first one to 50% of the average trading range, second one at 100%, and the last one at 150%. And so that way, as the stock rises to those peak prices, we can take the position off slowly. And so for the stop loss, I did a similar process. I took all the trades and I looked at the ones that went down before rising. And what I found is that stocks that drop around 50% of their average daily trading range tend to come back up. But if they drop more than 50% of the average trading range, then they tend to just keep dropping. And so I put my stop loss at minus 65% of the average trading range, which allows the stock to drop but basically provide enough wiggle room so that it could go back up after. And so far, that's been a really good stop loss. Some of these trades did have some drawdown, but basically none of them hit the stop loss except for a few of them. So just to kind of recap, we discussed the results for this system, how I pick my trades, and then how I execute the trades as well, and just kind of how it all works. So another question you might have is, how often do we trade? And so the quantity of trading that we do is completely correlated to insider buying, the number of insiders purchasing. And the number of insiders purchasing is completely correlated to the proximity to earnings season. Basically, every 3 months, every quarter, every company in the stock market reports earnings, and this time period is about 1 month long. And so what we see is that before earnings season, insider buying slows down dramatically, which results in us taking very few trades. And then right after earnings season concludes, the number of insiders that buy explodes, and we have a huge number of trades. And what's great is this website, SEC Form 4, shout out to them, show us the number of insiders buying. And so we always kind of know where we're at. We can also look at proximity to earnings season to guess, but just having the data right in front of us in real time is obviously much better. So understand that on average, we only take about 3 or 4 trades per month. Sometimes though, we might have 1 trade for the entire month, and then other times we might have 10 trades for the month, depending on where we're at on this area. I'm also all about small and consistent gains over time rather than going for huge home runs. So same thing, like I'm just not going to rush into bad opportunities. Also, I'm all about quality over quantity, so I'm not going to be rushing into bad opportunities even if the quantity of trading is low. I'd rather have a high win rate like we do rather than have a 50% win rate because I'm rushing into a bunch of bad opportunities. If you think about it, even if you just make 3% per month from one trade, then that's still a 36% annual return, which beats the market by more than 3 times. At the same time, you could take 20 trades per month, lose half of them, and then not beat the market. I don't want to have an emotional and financial roller coaster, so again, I just stick to trading only when all the parameters are met, which is what leads to the win rate being what it is. But it is important to realize that you should be diligent about taking the trades when they do come up, because they are pretty rare sometimes. And also, if you join the program, make sure you're mindful of where we're at on this time period, because if you join at one of these lows, then trading is going to be pretty frequent right away. But if you're joining kind of where we're at right now, then trading might be slow for a little bit. Both of those situations can be okay in my opinion, because if you join when trading is going to be slow for a while, it gives you a lot of time to practice and ramp up and be ready. But then at the same time, if you join right before things get crazy, you have an opportunity to make money pretty fast. So if this is all sounding good, your next question is probably, how do we actually work together to get you these results? There's 3 main ways that we work together. The first thing is you're going to watch a few videos that explain the whole trading process from start to finish. So again, how do I pick my stocks in depth, all the parameters? And then the second thing, how do you actually execute the trades in less than 15 minutes per day with that one and done order system I was talking about, where you click the one button and then everything's basically done. The reason to teach you everything in depth on the research process is just so that you can basically do this on your own one day. Not to be dramatic, but if I died or something and wasn't able to do this anymore, I don't want you guys to just be dead in the water. I hope that you guys can carry on where I left off. And then obviously the execution process is extremely important to learn so that you can do everything efficiently with confidence. I think the main thing that holds people back is just being able to execute the trades, but once you have that down, you're going to be successful. So after you watch the videos, we'll meet one-on-one to go over all your questions and essentially make sure you understand everything and make sure that you're ready to start taking some trades as well. I can help you practice and just get to a point where you're feeling confident. Typically after that, another really good coaching call that I've done with people is a one-on-one call during live trading, so that I can share my screen or you can share your screen and we'll just go through the whole process together and make sure you know exactly what to do in a live trade. And then from there, we'll continuously text back and forth and meet up when necessary on a Zoom call just to go over more questions and ensure that you're doing everything correctly. And at some point, we'll talk about how to scale, because in the beginning, you might only start with 10 or 20,000. The idea is obviously to start using more money so that you can make larger amounts of money as well. With scaling comes a lot of mindset stuff and emotional challenges, because it can be scary to be risking more money. And so we'll get to that when it's time. The second way that we work together is I provide my trade plan several hours every day before the market opens, so you know exactly what to expect for that day. It'll start by explaining the stocks that I'm considering that have insider purchases, and then I'll go through each one and go through the double filtration process with you to explain why the parameters are met or why they're not met. And if all the parameters are met, I'll talk about exactly how I'm going to trade it when the market opens, which will include the take profits and the stop loss and the position size for the trade. And then right when the market opens, you'll receive alerts of when my bot is buying and selling, so that you can basically just double check that you're doing the right thing in real time. Those are the main ways that we work together to get you results, but there are some bonuses too. I'm obviously working on multiple strategies at all times to improve the system's profitability, consistency, and scalability. For example, right now I'm looking at how we can hold stocks for multiple days, which is going to increase the profits and the scalability. But I'm not quite there yet. But as the system evolves over time and becomes more profitable and more scalable, you're going to get access to all these new features. I call them experimental strategies. Also, you're going to get access to our Discord, which is where you receive the trade plans and the alerts. And you can also talk to me there, other members, and it's kind of a little community. Just to be clear, a lot of Discords are very spammy and confusing. Mine is literally just 5 channels and there's only 50 of us in there. And it's a very chill chat room. So those are the main ways that we work together so that you can get the same results that I'm getting with this strategy. If this sounded interesting to you, then book a call below and I can answer any questions you have and go in depth a lot more. Obviously, we didn't talk about all the parameters, and my feeling is if you're going to trade this strategy and join the program, then you need to understand how everything works exactly before you make a purchasing decision, because this is your money that you're going to be risking. So again, if this is interesting to you, please book a call below. I'll answer all your questions, and there's going to be no pressure whatsoever to join. But if it does sound good to you, I can send you over the contract, I can send you the payment link, and then we'll get you onboarded. The price of the program is $7,500. you can either pay in 6 interest-free payments of $1,250, or you can just pay upfront. There's no reason to pay upfront though. I would go with the interest-free 6 payments. Also in the description, I'm going to link some testimonials from other clients, some live trading videos, and the trading results spreadsheet so that you can review all that. Again, to answer all your questions, book a call below, and I'm looking forward to meeting you.